All right, it's time for the three big things you need to know. Now, we got a lot to talk about, and there's a lot of things that are shaking up the market right now. So let's get right down to it. So, the first thing that we see happening is interest rates are starting to rise. Why are they starting to rise? Well, there's a lot of reasons. First of all, I want you to know that Jerome Powell, the Fed chair, is now refusing to leave the Fed, even though there's been another Fed chair nominated that's supposed to take over in May. He doesn't want to leave because one of the chair members is being investigated for some kind of shenanigans. And he says he doesn't have to leave his post until it's resolved. Now, we believe he's just trying to get back at Trump because he and Trump are going head to head. And Trump kind of drove him under the bus, and now he's driving Trump under the bus. The problem is that he's playing politics with our economy. And that is totally screwing us up. And that is wrong. Jerome Powell needs to go. He is causing all kinds of problems. Now, the thing is, number two, mortgage rates are going up because of certain reasons. The European central banks are putting pressure on our Fed to raise interest rates. Now, for all you folks that were sitting on the sidelines going, hey, I'm going to wait. We got a new Fed chair coming in that Trump's got in, and he's going to drop the Fed rate. Well, guess what? Now Jerome Powell's saying, hold the horses. I'm not doing any Fed cuts, and I'm not leaving. And the central banks in Europe are pressuring me to raise the Fed rate, not lower it. I'm telling you, it's a world gone mad. I want to show you a little bit about now what's going on in the bond market. So this is live right now. You can see the bond market is down 47 points. Now, you and I know, because you listen to me, that we want bonds to be high, not low. I want to show you, and look at the stock prices have tanked as well. Now, I want to show you the bond chart right here. You look at this bond chart, and back here, this was February the 27th, the Friday before we went to war with Iran. Look what's happened to the bond market ever since then. Down, 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 down. Just one down day after another. Now, we've lost about 120 to 130 basis points in bonds. That costs you about $1,300 more per 100,000 money that you're borrowing on a mortgage and loan costs. So it's not cheap. However, there is good news as well. So one of the things that we've found is that when this happens and interest rates go up, it becomes a buyer's opportunity. So number three, we've got 11,000 homes on the market in the Central Florida area. We are one of the only areas in the country that has an abundance of inventory. Most of the places that I visit right now have a shortage of inventory. So sellers are in control. Multiple offers are right and left. I'm doing loans in all 50 states, and I'm seeing that there's a more of a buyer's opportunity in our area than anywhere else in the country. It's huge. 11,000 homes. We only need 5,000 to 8,000 homes on the market to be balanced. Right now, buyers are back in control. And if sellers are sitting on their homes for 60 to 90 days, guess what, buyers? That's the time to get in the market. You know what Warren Buffett says? Be greedy when others are fearful, and be fearful when others are greedy. I think it's a good time to jump in the market. Your interest rate might be a little higher today than it was. We were sitting about 5.99 on February 28th, and now we're sitting at about 6.39. So it's up a little bit, about 0.4 of a point. Not horrible, but it gives buyers a little bit more leverage. So what I suggest you do is don't knock the price down as much as you get closing cost concessions. That will allow us to buy your rate down and let the seller pay for it. I'm telling you, there's some winning opportunities. Just because the market doesn't look as good as you'd like doesn't mean there's not opportunities. And don't wait longer, because the Fed's likely going to raise the Fed rate again, and you're going to lose. If you're refinancing, call me now. If you're buying a home, let's get you locked in as quickly as we can so it doesn't get any worse. Those are the three big things you need to know. Have a great day.